Just look at silver for a moment. We see month after 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 month for 16 months, billions of dollars every month, 40 to 70 million ounces every month. No one says who's doing that. The silver price and gold price got hammered. It's just a coincidence that 2 times in a row, the triggers that's supposed to stop the market when it falls that fast, there was a glitch. But at the bottom, JP Morgan covers, SLV delivers, and deliveries increase. That's all you need to know. The rest of it is just noise. This is how the big money repositions, through rhetoric, through price, through misdirection. All you need to see is the most well-informed traders in the world standing for delivery nonstop, no matter what the price is. They don't care. So no, this is not the beginning of the end. It's I don't want to play the paper game anymore. So what does that do? That leaves the big money. Thank you. We'll stand for delivery. Thank you very much. We already saw what TD Bank tried to do a few weeks ago. They said, we think silver's going to $40. We're putting a huge short position on it. Bang, they get stopped out at 92.
And they get crushed.
Millions of dollars. So
are gold and silver about to rally higher again? So, I think that's pretty much on every precious metal investor's mind right now, Andy, which is, I think they kind of feel a little bit like in limbo. Like, okay, we had this historic correction, if you're talking about it in terms of just total market value, that was lost quickly as silver went from 120 to what, mid 60s briefly or something like that. It's trading around 82, 83 an ounce right now as we're talking
higher
here.
Than that. It's let's see.
Doing it from memory, but I think it's in the low 80s.
It is roughly 80, almost $85.
Okay,
right,
mid-80s.
Almost
Great.
85.
All right. So, if you look at a price chart from, let's say, 2011, the price got whacked. It tried to recover for a little bit, and then it got whacked again, and it got whacked again, right? And so folks are wondering, okay, so did we drop, and now we're kind of chopping, and are we about to, is the floor about to fall out further like it did in 2011, or are things different this time in many of the ways that Andy's just, been laying out for us here, and are we going to start resuming to back upwards and perhaps even to new highs in the not too distant future? What is your answer to that?
That all that matters is that the people standing for delivery for 16 straight months of both gold and silver in the hundreds of billions of dollars on COMEX are the most well-informed traders on the planet, coinciding with the central bank's voracious appetite as the most well-funded and well-informed traders alongside those in New York on the planet. I want to just explain one quick thing.
And sorry, I'm just going to interject with this in case you want to add it in your answer. Neither of those things were in existence back in 2011.
No, they weren't. And what did Wayne Gretzky always say? What made him so great? I don't skate to the puck. I do what? I skate to where the puck is going. Do you think these people mess around? I wanted to be profane there, but I'm not. Do you think they mess around? Or do they know at spending 9 figures every single month? Every month. I don't. And look at it this way. And I think this is a good way to understand how this works. In 2017, that was 6 years of bear market from 11, the previous peak of 1900 gold and $50 silver, down to God knows where in 2017. I wanted to hide under my desk back then. It was not a fun time to own a metals company. As Bitcoin was taken off, the Dow was taken off, gold was getting hammered, central banks were selling. But then you had the Bundesbank, after 3 years of saying, give us back our gold, get really vocal about it, give us back our gold. But then we saw the Dutch bank, Hungary, Austria, Turkey, Poland, Czech, all of these banks said, give us back our gold too. And then in 2018, those same banks bought more gold as a group than they did in the 60 years previously combined. And then in 2019, that number doubled. But just coincidentally, the BIS said, by the way, those of you that own gold, it's now a tier 1 asset. That's how it works, huh? So let's just look at silver for a moment. We see month after 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 month for 16 months, billions of dollars every month, 40 to 70 million ounces every month. No one says who's doing that. That's really weird. And oh, by the way, it's now critical mineral state-sponsored price and price floor. And remember what Judy Shelton has told us both. She just met with Besant, right? What is Trump talking about yesterday? Nonstop, if you watch his speech. How many times did you see July 4th, July 4th, July 4th, July 4th, 250th anniversary? Could it be that he backs the back end of the Treasury market with gold, with the Genius Act on the front end? Maybe. We'll find out. But could that have any reason that all the gold is coming in? We see the settlement systems in the BRICS nations and all throughout the global south that are now settling in balances in gold instead of treasuries, trading local currencies over bridge networks like the cross interbank payment system, SIPS or MBridge, all of them free from SWIFT intervention, all of them settling in balances in gold. Could it be? Maybe. We'll find out. But I guess all I'm saying to you is that none of this matters. First of all, both gold and silver have never been allowed to find price discovery. And Jim Sinclair always used to say, they called him Mr. Gold. He was my friend. I miss Jim. And he used to say, the only way to win is to stand for delivery. And I always used to think, yeah, Jim, but I mean, it's a drop of water in the ocean. Oh, is it? Now you have some of the biggest money on the planet slowly. Can't do it too fast or the whole thing goes poof. But you see the stress everywhere through these deliveries. Keep on going, just enough to stay under the media radar and drain the hell out of it. And at that level, these people know where the puck is going. And the lack of any talk about this except guys like me is deafening. It's deafening. And I think that's all you need to know. So price is a tool of misdirection. Let me ask you a question, Adam. And I don't want to go down this road. I just want to say one thing. When Jeffrey Epstein was killed or killed himself supposedly in a maximum security federal prison, it was just a coincidence that the cameras went out that one time and the guards fell asleep. Okay, coincidence. I get it. And I would say this to you. The silver price and gold price got hammered. It's just a coincidence that 2 times in a row, the triggers that's supposed to stop the market when it falls that fast, there was a glitch twice in a row, so that it just got clobbered like that, right? Mm-hmm. It didn't stop. It's supposed to stop. It didn't because there was a glitch. Not going to do anything about it, but when it's free falling, it's supposed to stop after a certain point. Glitch, sorry. It just kept on going. The point of it is these coincidences are not coincidences. If you take a step back, pull the emotion away from it, and just simply say, the biggest money on the planet, who is the most well-informed money on the planet with no media attention at all, don't talk about it, is standing for delivery. And the only media attention is when it turns the other way. Everyone talks about it. See, it's time, it's oversold, just like 2011, just 1980, look away. But at the bottom, JP Morgan covers, SLV delivers, and deliveries increase. That's all you need to know. The rest of it is just noise. This is how the big money repositions, through rhetoric, through price, through misdirection. It's the no-look pass. And that is exactly what this is. So yes, price will go higher, massively higher. Will it be easy? No. The bull wants to throw you off its back every chance it gets. If not, everyone would be rich. And you have to either trust your gut. And look, you're like that dog at the pound who was, God forbid anyone would ever do this. There's a special place in hell, but beats the dog. Because my parents had a dog like that. They got at the pound. And anytime a woman would go near the dog, it would go like this. Obviously, whoever owned that dog, the woman would beat it, because men or boys, nothing. Girls or women, it would go like this. Cool. It was really weird. But that's how we all feel. We all feel like it's going to come again. We're waiting to get beat again, right? Because that's what we've all been accustomed to. Why? It's never been allowed to find price discovery. Why? Because no one stood for delivery. Why? Because no one was coordinated, sophisticated, wealthy, motivated to do it. But they are. And someone got to this administration and said, if we don't join this party, we're done. That's to my soul, that is my belief. And if you look closely enough and pull the emotion out, and it's hard when you spend a lot of money to get these positions. Damn, I hope he's right. I do too, because I've been buying it every 2 weeks for 36 years. But if I felt for a minute that it was over, I would tell you. I don't, because all you need to see is the most well-informed traders in the world standing for delivery nonstop, no matter what the price is. They don't care. That's, to me, all that matters. So no, this is not the beginning of the end. It's just a It's just the ebb and flow of a market that got too many speculators saying, aha, this will be easy. Let's just lever up and go. Well, you're not wealthy enough to do that, son. Thanks for trying. I don't care how rich you are. You're not all rich. And that's the central bank. Right?
Okay. So going forward, at least in the near term, then you think the price action will be healthier. Don't let me put words in your mouth, but it's not being influenced by the speculators. But there are these deep-pocketed players that are here in accumulation phase that are going to keep buying and keep putting that upward pressure on the market.
So another way of saying that is the open interest is falling off a chart, meaning the managed money has as low of a position as ever. The managed money is like, I'm not playing in this anymore. They just eviscerated us with margin. We got killed. So they're like, hey, I don't want to play the paper game anymore. So what does that do? That leaves the big money. Thank you. We'll stand for delivery. Thank you very much.
Yeah. And
the traders and speculators
at a lower price. They're happy. Yeah.
Right. And the traders, this is a game that they can play in other markets to trade and make money. But if you want to stand for delivery, sure, go ahead. You know, if you're a sovereign wealth fund for the Saudi royal kingdom or whatever, do it quietly, sure. But and that is what is happening is that and it's not even weak hands. These could be big money players, you know, individually, but not big enough to play in that game. And so they're out, and the big money stands for delivery with no margin at a subsidized price. Exactly right.
Okay.
JP Morgan not too long ago took a whole bunch of metal that was registered and moved it outside to a completely different category, which is outside the entire COMEX ecosystem, still on their balance sheet, but is no longer deliverable. So there are games being played by those in the United States, I think, to get on sides, leaving those exposed. The systemic nature of it, if Luongo is right, can bring down some of the biggest banks in Europe. We already saw what TD Bank tried to do a few weeks ago. They said, we think silver's going to $40. We're putting a huge short position on it. Bang, they get stopped out at 92. It cost them millions of dollars. So yes, it's just beginning, I believe. And it's all about physical possession over paper promises that are no longer trusted.
All right. I've got a big question for you, but real quick, a more logistical one. So the CME increased the margins that you have to hold to have your silver hedge, as you were just talking about. Have those margins come down at all since the hikes, or are we still at the highest level that they hiked margins up to?
They've come down a little bit because one of the things that they have done is normally it was a fixed fee. Now they do it as a percentage. But where the real margin hikes come in above and beyond the percentage of the contract value is, and they just did that recently, again, to smash the people who think that they can play in these sandboxes. You know, you may be very well heeled as a private investor or even as a family office. But you're talking playing with the biggest money on the planet. And they get reminded very quickly who's in charge, at least for now. They have come down a bit, but where they are because of the percentage, but they can hike it if they think that there is abnormal risk for whatever reason, too much volatility. They have the discretion to hike it. So it's come down a little bit. It was over 50,000, like 54, 55,000. I think it's like 49 or something right now, close. So but it has come down a little bit, yes.
Yeah, okay. All right, but to the extent that weighs on prices, that weight is still largely on the silver price.
But what it really does is it shakes out all the speculation. Now, to my point, you know, of standing for delivery that we keep seeing, right? Do you think these players who are spending that kind of money are using margin to stand for delivery? I don't.
I think, that's one reason why.
Shakes it out, and then they catch it down here at the bottom. Thank you. Right. And we stand for delivery at a third discount.
Yeah, which is interesting this time, right? Is that, you know, the previous huge spikes in silver got whacked, and largely that was concurrent with the CME hiking margins until the market broke, right? And then the market stayed broken for a long time. Potentially quite different this time because the big deep-pocketed, maybe sovereign players you're talking about aren't really using margin, so they just shrug it off. Yeah. So let me. Here's the big question. Okay, so if we are at the stage where the world is waking up to the fact that ounces are scarce, you know, scarcer than the world appreciated. So China is saying, all right, look, we're going to overpay for them. Bring it all here. We'll buy it off you, right? So you could say China is making an intelligent move to continue to increase, to accumulate. From what I hear you say too, it sounds like the U.S. is saying, you know, let's hoodwink everybody in Europe to try to send us their bullion to COMEX, and then we're just going to take it off COMEX and hopefully put it in someplace safe. So my question is sort of who's doing it right, who's doing it wrong, but in that context, if money if bullion is still moving from east to west, has America woken up and we're now in accumulation phase, but the rest of the West is still sending it to Asia, or are we still sending it to Asia as well? And if we are, then are we net adding or net losing?
I don't know who the dummies are that are sending it. They are from the West. I mean, here's the thing. The thing of it is that also that these contracts allow for delivery. Now, I'm sure there are some traders throughout the Western infrastructure that are silly enough to do this. Why not? I don't know. You know, part of the making it critical mineral is the ability to limit or completely disallow exports. We haven't got that far yet. But I do think on a state level, I would probably see that the majority of the big traders in the United States are not doing it right now. But that doesn't mean it's not happening all through Europe, all through the West. Maybe there are some in the United States that are. I don't know at that level. That's very, very almost impossible to see who's doing it. But it's enough to where you can tell it's still happening because the arbitrage window hasn't been closed. If no one was doing it, they wouldn't leave it open as long as they have. It is happening, and a lot is flowing that way. Who's behind it? Don't know. We would like to hope that the U.S., the people aren't that stupid. But, you know, we have never done this until this administration. I've never seen this ever before in 35 years. I've never seen anything like this. This is so far an outlier to anything I've seen my whole career. I can't even begin to tell you. So I would say we weren't doing it right. The rest of the world was exploiting the paper price, and it started with the BRICS. You know, think back to when you were a kid, Adam. India and China were third world, right? And they were. And you know, Russia was certainly not going to challenge the Western markets. And these countries that make up the BRICS, they would have no interest in challenging the Western hegemony. No one in the West did it here. So they had the ability to control the prices forever. And creating this illusion through price that silver was so abundant and irrelevant. Why would anyone care? It was the ability to create a perception of reality through futures contracts. Now, these countries in the global south are coordinated and motivated and sophisticated. They understand the math very well. They see the long game very well. And the part that people can't deal with, again, is what I said earlier. The amount of time it takes for them to do this the right way, playing the right game. The long game is something that is dismissive by the mainstream media. They don't get it. And even a lot of people who would look at this and say, well, why not just spend $3 trillion and buy it all? 10 trillion. Why not? Mm-hmm. Because if you do that, you cut off your nose to spite your face. You would blow up the market like that, and everyone would know what you're doing. But instead, if you use proxy banks, if you use, you know, the Globex market, which allows you to do this quietly, it gives access to COMEX with a lot of anonymity. You use sovereign wealth funds, and quietly, you know, the death by 1,000 paper cuts, that's what they're doing. And you see it. It's happening everywhere, in Shanghai, in COMEX, and in London, and it's going to accelerate. And thank God someone got to this administration and said, y'all, look at what's happening. We're going to lose this race.
Right, don't be left behind.
Yeah. Yes, and all the paper promises in the world don't do you any good. It's like I always say to people, if things get bad, do you want stock in Kellogg's or boxes of Frosted Flakes? That's kind of the dichotomy there.